Hi guys, welcome to my channel KP Financial and Strategy Review. Myself Praveen Kumar. I'm a qualified chartered and management accountant. Before proceeding into today's topic, please subscribe, like and share so that it can reach to many relevant people. As I told you in the previous session, this channel will be useful not only for finance professionals but it will be useful for everyone in general, whoever is interested to learn and understand how financial accounting and reporting systems works, and how reviews and audit process works, and how business strategies are built, and how they are implemented and monitored and controlled, and how corporate strategies and business models and performance models are built and they implemented, and how they are measured and controlled. Each and everything we'll be discussing in this channel. So in the channel I will be focusing not only on financial numbers as well as the stories and the scripts behind these financial numbers I will be discussing, and as well as I will be discussing about important non-financial aspects also, like customer perspective, learning and growth perspectives, and employees perspectives, internal business process perspectives, and as well as different strategy models available. We'll be discussing each and everything in detail with real life case studies. And coming to today's topic, I will be discussing one of the important component of strategic management. This is five pillars of corporate success. The diagram is self-explanatory. The diagram shows there is a building, and for the existence of this building, there are five success pillars. And beside the success pillars, there is a strong floor called as 3 and 3P. And above all, there is a strong foundation here that is called as ethics and values. If you can correlate this with our normal any structural buildings, this will be like a foundation concrete, this will be like a floor marbles and tiles, and these are the pillars. And this concept applicable for each and every company, whether it's a public limited or private limited, profit for organization, not for profit organization, irrespective of the nature of the business and the company. This structure will be applicable each and everything, each and everywhere, and even this can be applicable in our personal lives also. And here I have mentioned, for success of any organization, there are five pillars are required, and these are called as a key pillars for any corporate success. This is the mnemonic VMHGO, stands for vision, mission, strategy, goals and objectives, and all will go in the sequential order only, not any other manner. Here vision states, here first of all, before proceeding, I want to explain you. See, in our academics or professional institute level, whether it's a master's or bachelor degrees or professional education level, we have learned a lot about this vision, mission, strategy theoretically. But in practical life, how it will be applicable in corporate scenario, how this model will be developed and how it will be implemented and controlled, I will be focusing on much on this. Why? Because everyone is having reasonable amount of theoretical knowledge, so I will not go into much of theoretical knowledge. I will be focusing only on the practical aspects and how this practically in a corporate world this is applicable. Only that I will be focusing on that only, and I will be sharing a relevant case studies of practical life so that you people can understand in a easy and better manner, and you can correlate to the your companies or wherever it is applicable to you. So now what is vision? Vision is where an organization wants to go, what is the future aim of this organization. Mission states what is the purpose of this organization, for whom this organization is existing, and what is the core objective of this organization. And strategy says what are the plan of action should be taken in order to achieve this vision and as well as mission. And goal says these are nothing but targets, you can say. And whatever, whenever you're fixing a targets, you do not fix the target just in a vague or unreasonable manner, unachievable manner. Whenever you're fixing a target, you should focus on the principle called as a smart. What is smart, I will explain you. And in order to achieve all this, there will be underlying objectives. Objects are nothing but the steps and the guidelines to be followed in order to achieve this 1, 2, 3, 4. So further objectives are drilled down into critical success factors and KPIs. Critical success factors are nothing but these are the main essential critical elements should be focused by any business organization in order to achieve objectives or goals. And what is KPI? KPI is nothing but key performance indicators, key performance measures. Here these KPIs are important to track and monitor whether are we in the progress track, are we deviating our goal, are we deviating our objective, where we are moving towards, what direction we are moving. This KPI helps to give a useful sites. Now coming to 3E and 3P. What is this 3 and 3P? 3E stands for 3E stands for effectiveness, efficiency and economy, and 3P stands for plans, policies and procedures. And behind this there is ethics and values. What in by ethics? Ethics is nothing but the integrity, maintaining of integrity, transparency and professionalism and responsibility towards the all stakeholders and as well as community. And as well as what do you mean by values? Values are nothing but the work culture and how it depends like how an each individual is responding and interacting with each and everyone within the same organization, and how they are responding and interacting with all stakeholders internally as well as externally. This is in short, and if you want to go in detail, this is the explanation for each and everything. I will go through just in a summary in a short. Vision states where do you want to go and what do you want to be in the future in a simple language. Whatever I explain, I will keep only in a simple plain language so that each and everyone can understand, even though finance background or non-finance background. Next comes mission. Mission states the company's purpose, roles, objectives and existence of the organization, for whom this organization is existing and to whom this organization is providing services currently. This is called as mission. Here it says where do you want to go. Here it says why do you want to go. So once you decided where you want to go and why do you want to go, what is the next step? The next step is called as a okay, how do you want to go there, how do you want to reach there. This is called as a strategy. Strategy is a plan of action for achieving this above vision, mission, goals and objectives. So here it says where you want to go, here it says why do you want to go, and then it says okay, now finally how do you want to reach there. Now in order to achieve this 1, 2 and 3, you need to be very smart and you need to fix the targets, and those targets should be specific, measurable, achievable, realistic and time bounded. Otherwise if you keep a target which is unrealizable or which is unreasonable or which is not practically achievable, in such cases whatever the targets you keep, that will be just merely in the paper or theoretical manner. It cannot be achieved. When it cannot be achieved, then the step 1, step 2, step 3 cannot be achieved. So whenever anyone is preparing any particular targets for any particular CS person or marketing person, any particular department, any particular division, in such cases they need to ensure that the target should be smart, means by following these mnemonics. Next concept comes objectives. Objectives are nothing but these are the general principles or guidelines that should be followed as a stepwise in order to achieve this 1, 2, 3, 4. Next comes critical success factors. These are the key areas in which the company has to focus and achieve, so that which will help to achieve above 1, 2, 3, 4. These are called as critical factors. And if you want to say further in detail, critical success factors will be depends upon the nature of the business and the type of industry in which the company operates, and there will be standard critical success factors for each industry. In addition to that, for the respective company in which the companies operates, considering their operating systems and the environment, there will be critical success factors that the management has to focus on that, and they need to identify what are the critical success factors for them to achieve the competitive advantage and to be successful in the long run. And next comes KPI. These are nothing but the measurement tools which are used to measure are we in a right track, are we deviating, what is our progress, are we achieving our vision, goals and objectives on time or not. This is the KPIs. Now you can ask one question. This vision, mission, strategy, objectives and each and everything is very nice, but generally this will be applicable and generally this will be prepared at board level or senior management level or management level or at operational level, production level or sales level, marketing level or product development. This kind of operation related aspects, this concept will be applicable. In what way finance has to do in this is the is an important question. That's why I have kept here the role of finance department. As I told you previously, each and every topic whatever I discuss, I will be relating it to the finance directly or indirectly, and I will be showing case what is the role of the finance department in this particular context. So in a similarly, now what is the role of finance department? Here the role of finance department in this particular context is called as the role of finance manager or CFO is to ensure that the company's financial resources are being used effectively, efficiently and economically to support that vision, mission, goals and objectives. It means that the role of either finance manager or CFO or finance director, whoever may be the finance in charge, as the case may be, they have to ensure that sufficient and appropriate financial resources are available on time, and those sufficient appropriate financial resources are utilized in an effectively, efficiently and economical manner by following the concept of 3. And thereafter, in order to ensure there is a sound financial resources available, and in order to ensure that are being utilized effectively and efficiently and economically, they need to come up by developing and implementing financial plans called as plans, policies and procedures. This is called as a 3P. If you correlate with this diagram, I have told you these are the 5 pillars. Organization will focus like board or respect to management or senior management, those people will focus on this. And now, what is the contribution of finance department is? The contribution of finance department is to ensure that 3 and 3P are being followed, and as well as they need to prepare plans, policies and the procedures by following 3P and as well as 3E, and the 3P and 3P and 3E, these two act as a strong floor to sustain these pillars. If this floor is not good, if floor is broken, or this is broken, ethics or values are broken, or this is floor is broken, then there is no purpose of existence of these pillars. Even though in short run these pillars might work, but in the long run, when there is no strong base of 3 and 3P, and when there is no strong foundation of ethics and values, these pillars will collapse one day in the long run. So this is the objective of ensuring 3 and 3P and the role of finance department. And here the role of either finance manager or CFO is to ensure 3P is implemented and 3E is implemented. In addition to that, whatever they implemented, that should be supporting the vision and the mission, and they will be further monitoring, analyzing the financial performances and providing the financial insights to the senior management, and as well as providing the required relevant financial information to other departments and managers like operation department or production department or whatever the department is involved in the respective company. So providing key information to the senior management and presenting the key information in the board and as well as senior management, so that they can understand the financial performance of the company and as well as overall the business performances of the company. This is the role of a finance manager and CFO in context of supporting these 5 pillars. And additionally, in addition to this role, a senior manager or finance manager or a CFO has to ensure they have to implement the role of FID role. What do you mean by FID role? FID role is nothing but financing, investing, dividend strategies. So they should come up with FID role, that is financing, investing and dividend strategies, by ensuring 3P and 3 is followed, and thereby as a whole these 3E, 3P and FID roles all are contributing towards supporting these 5 pillars, so that the organization goals and objectives and vision and missions will be achieved. What do you mean by this investing, financing, investing, dividend strategies? I will be discussing in further topics, and I will be posting a series of videos going forward on this particular role, and as well as on this 3P and as well as this 3E. I will be posting series of videos in detail with practical life case studies. So thank you all. Thank you very much for your time. Please subscribe, like and share, and stay tuned. I will be posting series of videos shortly on this topic with practical life case studies and as well as some other topics. Stay tuned. Thank you very much.